Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Having shown much volatility near and around the base of 65.20.45, the Australian dollar is still in a prime position to challenge higher levels. Any return towards this bottom side of the range should again see solid demand after recently posting an engulfing candle. From there, the market is expected to take the challenge on towards 66 cents and maybe to the objective around 67 cents. It was very volatile for the euro after taking a stab at that key level of 107.2025 as the dollar index, which measures the greenback strength against a basket of six major currencies, recaptures the 104 handle. Following Friday's stronger than expected US non-farm payrolls. The US Labor Department data showed a stronger than expected figure which missed the 185,000 forecast and added 199,000 jobs in November, while the unemployment rate declined to 3.7% compared with a forecast of 3.9%. Friday's jobs report is one of the last major pieces of the data that the Fed will get before it announces its interest rates this week on Thursday, Sydney time. Before then, we do get the CPI data on Wednesday, which could give at least a bit of a sway on how the market may be moving, and along with that, how the central bank may be thinking. Furthermore, the European Central Bank is also to announce its rate decision, which widely expects on Friday to see rates hold at 4.5%. So looking at the technicals, the market is attempting to pick up, and then from the rejection also from that 107.2025 could see the move up towards 108 to 109 and the objective holding at 110. If the US Federal Reserve does keep its dovish stance, then the dollar should eventually slip away from 104 and look down towards 102 to 101 and reassess from there. After a very big roller coaster ride late last week, the market is stabilizing a little as it recoups some of its losses but still maintains a negative bias. Looking at the dollar yen price action though, we can see that the prices are likely to take another tumble and look towards the region of around 144.5, maybe even down lower towards 141.5 where we saw this market stab not so long ago. Any upside attempts? Well, the resistance comes in now around 145.90. Moving on to sterling, the market is still somewhat a little bit mixed, but I'm not getting negative or abandoning the view that we could get eventually a rally onto 126 to 127. With Bank of England rate decision this week, with the Super Thursday, could see rates on hold, which is viewed around 5.25%. If so, it's the statement that we'll be keen to watch from Governor Andrew Bailey and see how he views the inflation and also how he sees start of next year. Finishing up with gold, well, the market crushed the level of 2007 and confirmed this engulfing candle and now puts the target on towards 1,986 and then maybe down lower if we see a break towards 1,968 to 69. Any advancement? Well, the market appears capped somewhere around 2009 to 2011. Wrapping up with oil, well, the market's finally snapped out of its bearish bias, but still closes 7 weeks in a row to the downside. Nevertheless, the rebound has a little bit more work to do and needs to clear 72.60.65 and therefore would give us a further run at $76 to $78 a barrel. But I'm not abandoning this bottom side of the range, which is seen around $67 to $68 a barrel. Because if we fail to break above 72.60, then the downside will become vulnerable again. Well, that's a wrap for the start of this week. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day.